All right, thank you so much. Welcome, everyone, and thank you for joining the third webinar in the MTW Expansion Flexibility 2 Cohort Onboarding series. I'm Andalyn Nesbitt Rodriguez, happy to be here with you today, serving as your MC for this session of the onboarding series. Next slide, please. All right, so today's agenda. Today we're going to discuss financial policies and procedures, including Section 8 and 9 funding calculations. Then we're going to hear from an expert, Maria Razzo, Executive Director of San Bernardino County Housing Authority, who will share some insights around financial policies and procedures. Then we're going to go into breakout rooms. So we'll have a bit of a good time in there discussing long-term goals as they're related to MTW funding fungibility and the steps your agency needs to take to prepare for your MTW status. We're also going to discuss in there any topics that you'd be interested in learning more about as it pertains to MTW funding fungibility. After the breakout discussion, we're going to watch a video recording from another expert, Jody Bogan, CFO of the Boulder Housing Partners. Um, we're going to have a Q&A period at the end of today's webinar, but as always, want to encourage you to put your questions into the chat box along and along. We will be stopping to answer questions kind of throughout the webinar today. So please don't hold back. Go ahead and put those into the chat. And yes, Maria Razzo is the executive director at one of the 39 original MTW PHAs, San Bernardino County Housing Authority. So happy to have her here and should be a really good, interesting session. So we'll get started. With that, I'm going to turn it over to Philip Pless to discuss sections 8 and 9 funding calculations. Philip?
Okay, thank you, Andalyn, for getting us kicked off here, and welcome back, everybody. All MTW Flexibility 2 Cohort PHAs. Today, we're going to talk about some topics that we were not able to hit in the prior webinar that are still very important. And to start us off today, we're going to talk about something that I think you all will all be very interested about, and that is how is your funding going to be calculated now that you guys are either have become an MTW agency because you've executed your ACC, or you will become one soon once you execute your ACC amendment. Okay, so let's start off by talking about the two programs that there is no change at all. Okay, so in Section 9, this is referring to public housing funding, both for the operating fund and also for the capital fund. The funding calculation process is going to be the exact same as you currently do. So specifically for the operating fund, you're going to still follow the process under Part 990 to get for the calculation of your eligibility. And in regarding to obligations and expenditure requirements, there's also no changes there from non-MTW agencies. And finally, the requisition process for receiving your operating subsidy is not going to change. So bottom line for operating funds, nothing is changing at all, okay, now that you're becoming MTW. Okay, with capital funds, for the funding calculation process, again, nothing is going to be changing with that calculation as well. Same thing with the obligation and expenditure requirements. You guys probably remembered from the previous webinar, we had Damian Thomas from the Capital Fund here talking about the obligation and expenditure requirements and the immediate need requirements. Those requirements still apply for expansion agencies and all MTW agencies as well, or sorry, all expansion agencies in addition to all of the agencies in this cohort. The only change in this sort of process is the requisitioning. So as Damien had covered in the prior webinar, you're going to use MTW budget line item 1492 in the Energy Performance and Information Center system to record uses of capital funds that are being used for eligible MTW purposes, okay? So let's say, for example, the one we had from last time, you're an MTW agency, you want to use some of your capital funds to pursue what's called a local non-traditional housing activity. We're going to talk a little bit more about that today. And that particular activity will be talked about more in depth in the June and July webinars on the MTW supplement. But if you were to use capital funds to pursue an L&T activity, you would record that line item in BLI 1492. Okay, so just as a reminder, funds are still being dispersed, however, through locks. Okay, so even though that's a new BLI you're going to be using, and just as a reminder, for your sort of traditional capital fund activities, so you're just using your capital funds for eligible activities under the capital fund, you're going to use the same BLIs that you've been using prior to becoming an MTW agency. The only change is the use of MTW funding flexibility with the capital fund program. That's going to be recorded in BLI 1492. Okay, so let's talk about the final program, and that's going to be Section 8, also known more commonly as the Housing Choice Voucher Program. So let's talk about the funding calculation, and this we're going to get into quite a bit more depth than we did for the capital fund and operating fund. But to start us off, let's talk about what is not changing. Okay, so the component of your funding under the HCV program that is not going to change now that you're becoming an MTW agency is going to be your administrative fees. So your administrative fees are going to be earned just like they currently are for non-MTW agencies. And of course, that's based on leasing data that you guys submit in VMS every month. Obligation expenditure requirements are also not changing. As you guys may know, the HCV program funds are know your funds. And then finally, the requisitioning process. Unlike for the capital fund program, there's sort of no requisitioning needed. You guys' monthly disbursement is going to be based on your monthly HAP expenses from VMS, unless you have a situation where your current expenses exceed disbursements. So for non-HAP expense disbursements, those can be requested by contacting your assigned financial analyst in the Financial Management Center to do that. Next slide, please. Okay, so let's talk about the housing assistance payment, or the HAP component of the HCV program, how that is going to be calculated in future years now that you're becoming an MTW agency. So as you guys probably know, you have already received your calendar year 2024 HCV renewal enclosures. So we're really talking about future years here, okay? Because you guys have already received your funding for this year. So let's talk about this. So your HAP renewal eligibility, now that you are going to become MTW, is going to be based off of the lower of two items, okay? It's going to be based off of the lower of what's called the MTW HAP renewal eligibility cap, or your rebenchmark year's actual HAP and non-HAP eligible expenses. Okay, so let's break this down, because this is a mouthful in terms of like just the words. You know, it's a long kind of string of text. So let's talk about it. So let's first talk about the MTW renewal eligibility cap. That is essentially going to be derived by taking your pre-MTW monthly PUC, or per unit costs, inflating it to the current benchmark year, and then we're going to multiply it by the total number of MTW eligible ACC authorized units in the rebenchmark year. So simply, it's going to be your pre-MTW PUC inflated to the current year times your total number of MTW eligible ACC units times 12, right? Because it's going to, it's a monthly calculation the way it's written here, and we multiply it by 12 to derive that amount. Okay, the second step is going to be calculating your rebenchmark year's actual HAP and non-HAP eligible expenses. And to derive that total, we simply take your total reported HAP expenses in VMS, and then we're also going to add in any eligible non-HAP MTW expenses. So for example, let's say you're using HAP funds to pursue that LNT activity that we talked about earlier. You're working on an LNT housing development activity, you spend some HAP funds. Those are the kind of things that would be included in that category, okay? So now that we've kind of talked a little bit about this formula, I think it would be helpful to actually walk through an example with some fictional numbers with the Anytown Housing Authority in Anytown, USA, one of our favorite fictional housing authorities that we like to feature here in our onboarding series. So let's go to the next slide, please. Okay, so first of all, just to kind of walk you through this process of what we just did, let's start by gathering our fictional data for the Anytown PHA, okay? So we were able to determine, and we're going to pretend like we're calculating their calendar year 2024. We're going to use this, and actually I think that there might be a mistake on the slide, but we'll fix that. So let's say their calendar year 2023 monthly per unit cost was $1,200. Their calendar year 2024 inflation rate was 6%. We also know that they have 500 eligible MTW ACC units. And then that's the data that we need to be able to calculate the HAP renewal eligibility cap. Okay, so those first three data points are going to help us calculate the HAP renewal eligibility cap, or step one in that process that we just went through in the previous slide. Okay, let's take a look at the next two data points. So the next two data points that we have are the calendar year 2023 HAP expenses reported in VMS. That total is $6 million. And then we also have the calendar year 2023 eligible non-HAP MTW expenses is 1 million. And we'll just say, for all intents and purposes, just to illustrate this example a little more concretely, this $1 million that was reported in VMS was for an L&T housing development activity. Okay, so we know Anytown Housing Authority is pursuing an L&T activity, and that's what this $1 million here is reflected. Okay, so let's go to the next slide. Okay, so we've gathered all of the data that we need, and just keep in mind that inflation rate is going to, and I see there's a question in the chat about L&T. We're going to be talking about that in a few slides. So just keep in mind this calendar year, it should say 2024, not 2023. So just keep that in mind. We'll fix that on the slides, and when they're reposted on the HUD Exchange, we'll make sure that that's updated. Okay, so now what we want to do is we want to calculate our MTW HAP renewal eligibility cap. So the first step of this process is going to be to calculate our inflated per unit cost. So remember, we know that our pre-MTW per unit cost, or PUC, is $1,200, okay? And then we know that the renewal inflation factor for this previous year was 6%. So in order to get that inflated PUC for calendar year 2024, we're going to multiply our pre-MTW per unit cost, $1,200. We're going to multiply it by 1.06. That basically gets us to our inflated per unit cost is going to be $1,272. Okay, so that's the first part that we need in order to calculate the eligibility cap. The second step is we're going to multiply our new calendar year 2024 PUC. We're going to multiply that by the number of MTW eligible ACC units. We know that we have 500, correct? So we have that up from our slide up here. We have 500 ACC units. So we're going to multiply 1,272 times 500, and then we're going to finally multiply it by 12. Okay, and that will give us the MTW renewal eligibility cap. So that total is 7,632,000. Okay, so that's how we derive the first of those two calculations. We have just covered how to calculate the MTW HAP renewal eligibility cap. And so let's move to the next slide, where we want to talk about calculating the total eligible expenses. Okay, so if you guys remember, to calculate the total eligible expenses, we need to add simply our total reported HAP expenses from VMS from the calendar year, from calendar year 23, and we want to add that to our eligible non-HAP MTW expenses. So if you guys remember from the little box of the table up here, we're going to add our HAP funds, which is $6 million of expenses, plus our eligible non-HAP MTW expenses, which is that, remember, that $1 million that this housing authority used to do an L&T, a local non-traditional housing development activity, to get our total eligible expenses, which is $7 million, okay? So that's what we're going to do. So now we have our two numbers, and if you go to the next slide, what we need to do is we now need to compare the MTW renewal eligibility cap from step 2 with our total eligible expenses. The lower of these two numbers is going to be Anytown Housing Authority's calendar year 2024 HAP renewal eligibility prior to proration. Okay, so in this example, we're just going to pretend like there's no proration. We're going to assume Congress gave us all of the money that we needed to be able to fund everybody's eligibility, everybody's renewal eligibility under the HAP component at 100%. Okay, so we know that the MTW renewal eligibility cap was 7.632 million, right? We also know that the total eligible expenses is 7 million. And since that total eligible expenses number is lower than the MTW renewal eligibility cap, the Anytown Housing Authority's calendar year 2024 HAP renewal eligibility will be 7 million, okay, because total eligible expenses is lower than their MTW renewal eligibility cap, okay? Next slide. Okay, so we've gone through a calculation together, a fictional calculation from our fictional Anytown Housing Authority. But I also wanted to just reiterate that we have several additional resources that cover this topic in more in depth. The first is we did a webinar in October of 2020 that goes into quite a bit of detail on the HAP funding calculation. I believe there are some additional examples in this webinar. It also covers a couple of other topics that are germane for you all. It covers the statutory requirements, and it also covers a little bit more about funding flexibility. This HAP renewal calculation is also covered in Section 6, Part 5, Subpart B of the MTW Operations Notice. So you see we have links both to the webinar and then also to the MTW Operations Notice. And then finally, we have an online training module that covers these two topics. So you'll see the link there to the HUD Exchange, and then you can also, excuse me, click on these links to find out some additional information on this topic. All right, next slide, please. Okay, so I think we had a question in the chat talking about local non-traditional activities, and we're going to talk about this just in a little bit of context, because we're going to cover it in the context of covering an important MTW operations notice requirement. But before we talk about that requirement as it pertains to HAP funds, let's just step back for a second and talk about LNT. So as I had mentioned, LNT stands for local non-traditional activities. And these are activities that are actually very unique to the MTW program. So this is something that makes MTW agencies unique. Is this is sort of an eligible activity category that is something specific and unique and special to the MTW housing authorities. So your MTW funding, either CAP, operating, or HCV funds, can be utilized to implement LNT activities. So there's three kind of broad buckets of funds. There's one is, excuse me, rental subsidy programs, service provision programs, and then housing development programs. Housing development is a very common local non-traditional activity. This is essentially, you utilize this authority to kind of build additional affordable housing in your neighborhood. And there are there are some additional kind of requirements with that activity, and there's additional information that can be found about all of these eligible LNT activities. You can find out more about this in waiver 17 in Appendix 1 of the MTW Operations Notice. And we also have a PIH Notice 2011-45, what we call the LNT Notice, that goes into a lot more detail about sort of with additional information about these three different LNT activities and what the requirements are there. However, so that's just a little bit of background information, but I do want to point out one thing, because this is a financial management topic, and that's that expansion agencies can expend up to 10% of your housing assistance payment dollars on LNT activities without what's called an approved safe harbor waiver. So don't worry too much about the term safe harbor waiver or even just the waivers, because we're going to talk about MTW waivers from the operations notice in a whole lot more detail during the next installment of the training, which is going to be on June 27th. And it's going to go into a whole lot of detail about just overall waivers and these MTW waivers as well as special waivers and things of that nature. Okay, so just be sure to stay tuned for the June 27th webinar to find out more about this topic. But at least the bottom line takeaway from this slide for you all right now is that if you guys are interested in pursuing an L&T activity, you can obviously use your operating and capital funds with that as well, but specifically for HAP existence, so specifically for HAP dollars, you are allowed to expend up to 10% of those HAP funds on L&T activities without an approved safe harbor waiver. And we will cover that topic of safe harbor waivers in a whole lot more specific detail in the June 27th webinar. Next slide, please. Okay. On a final note, before I turn the presentation back over to Andelin, is I just want to take a minute to reinforce that MTW agencies, expansion and initial agencies, are still subject to 2 CFR Part 200 requirements. So as you guys likely know, 2 CFR Part 200 requirements are kind of overall financial management requirements across all federal government programs. Essentially, any housing program or any federal program really where folks are receiving federal assistance, either in the form of grants, loans, etc., are bound by these requirements. And this is something that is not going to change once you execute your MTW ACC amendment and become officially MTW, okay? You will still be subject to all applicable financial management requirements under 2 CFR Part 200, things around single audit act submission, indirect cost rates, any of those kind of financial management requirements will still be applicable for MTW agencies. And I think with that, I am going to hand the baton back over to Andelin, who is going to introduce our keynote speaker, the one and only incredible Maria Razzo. Take it away, Andelin.
Yes, thank you. Thank you so much. Before I introduce Maria, we have a few questions in the chat. So thank you guys. Please keep them coming. We had one that was really pertinent to what you were talking about, Philip. So I want to just address this one question and then we'll move on to hearing from our expert, Maria. So the question is, for HCV renewal funding, you don't inflate actual expenses at all if that amount is less than the cap. You only prorate it. Is that correct?
Yes, that's correct. So yeah, that's correct. Because if you guys recall, the per unit cost part of the calculation, that step is being covered in the HAP renewal eligibility cap. And so what we're essentially doing is we're comparing. So basically, and just as an overall note here, this is something I didn't cover in the slide, is that this formula was essentially designed so that any MTW agency, any expansion agency that's becoming MTW would be receiving no more funding or no less funding than if they had stayed non-MTW. Okay, so the MTW HAP renewal eligibility cap basically it's a two-part test to ensure that we're not, you're not receiving more funding than you should have you should not receiving more or less funding. You're basically being held harmless as a result of this formula. Okay, so the per unit cost part of the equation comes into that first step, which is the MTW HAP renewal eligibility cap, where we're taking your per unit cost, we're multiplying it by the applicable inflation factor and then by the number of ACC units times 12 in order to get that. The second step is kind of more similar to the traditional HAP expenditure formula, where we're taking a look at your actually reported expenses during the year. And the lower of those is the funding you receive.
And how does the RFIF factor into that? Valerie says she thought it was applied to get to the renewal amount before proration.
I actually, I think, do we have somebody from the FMC on the line that wants to further clarify? I don't know if Luan or June or Leslie are on this call. If not, we can hold this question and we can we can make sure we get an answer back out to everyone.
Wonderful.
I can answer
the
for our
email.
PHA, Philip.
Okay.
Because we have the spreadsheet and it shows the calculation and then the renewal inflation factors applied and then proration.
Thank you so much. And that is a perfect segue into my introduction, hearing from our expert, gaining some expert insights from Maria Rasso. Again, Maria is the executive director of the Housing Authority of the County of San Bernardino and one of the original 39 MTW agencies. So we're happy to have you here, Maria. I'll pass it over to you now.
Thank you. Thank you. Thanks. Good morning and good afternoon, depending on where you are in the country. My name is Maria Razo, and I've been with our Housing Authority for almost 18 years. And before that, I was with a non-MTW agency for 9. I've been with our current Housing Authority both before we received our MTW designation and, of course, almost 16 years into our MTW designation. So this slide covers a brief overview. Just wanted to give you a picture of our agency scale. We are the largest geographic size county in the contiguous United States. So our payment standards are fun and our inspections are fun. And then here's just an overview of where we are within the state of California and the size of our programs. Next slide, please. So just a little bit of background about our Moving to Work designation. We celebrated our 15th anniversary last year. We currently have 30 approved Moving to Work activities, and they fall into the 3 statutory objectives as follows: 12 for operational efficiencies, 9 to help our families increase economic independence, and 9 to expand housing choice and opportunities. One of the things that I talk about a lot to new MTW agencies is one of the really great suggestions that we received, or advice as you call it, from our MTW analyst or coordinator at the time, who was Marianne Nazaro, was to tackle your administrative and operational efficiencies activities first. When we received the designation, we were so excited, and we actually had a list of all of the things that we wanted to implement. And so we're so glad that we took that advice, because there are some activities that are going to require some additional staff time. As an example, anything that would increase economic independence, like rent reform, or expand housing choice or opportunities, usually take a little bit more of your staff time, both from an administrative standpoint. You know, it could be finance, IT, operations. And so what we tackled first was those activities, like triennial, biennial recertifications as examples. And we'll go through just a brief overview of our 30 activities and what we've implemented to tackle those first, so that you have some staff savings and then have that time to tackle the other ones that may take a little bit more time. Next slide, please. So when we first receive our designation, the question that we asked ourselves is, what do we want? Why? Why did we want the designation? And what do we want to accomplish with our designation? And what we came up with, very high level, were 2 things. We want to, first and foremost, assist our families to empower them to self-sufficiency. What does that mean? What types of changes are we going to do? You know, what is our rent reform going to look like? And also, we want to streamline some administrative items, not just for our team, but also for our families. So, and this was before we could, you know, through HotMed, do biannual recertifications. And so the thought process was behind that is, what are some of the things that we're doing that just don't make sense that we would love to change? How we started that process was we had focus group sessions with all of our staff, and we had those big ginormous sticky notes on the wall, and we started writing down all of the ideas. If there's anything that you could do, and you may have already started this process when you submitted your application. And so what we discovered is that when we narrowed down or kind of broke out the list into things that we needed our MTW designation for and things that did not need the MTW designation for, we realized that it was about 50-50. So one of the great things that we have recognized as a result of our designation is that we have really, it's shifted our mindset and our culture in terms of who we are and how we think. And so, you know, with a traditional housing authority, your mindset is, well, I can't do that because of the regs or, you know, whatever it may be. And now our mindset is, well, how can we, what do we need to do to change it, right? To make it better. Whether it's something that's just administratively burdensome or challenging, or something that would really benefit our families and help empower them. Next slide. Here's an overview. There's 3 slides that cover our 30 MTW activities. And you'll see here that, and this is actually a 2 pages that are included on the last page of our MTW annual plan. So our MTW annual plans are all posted on our website, and I'll give you the link towards the end of my presentation. And at the very last page, we did this intentionally, is a list of all of our activities. So you can go if you'd like to peruse through them and see. And if you want to learn more, then of course there's detail and narrative within our MTW annual plans and our reports, but this is always on the very last page. It's the last appendix. And so you'll notice here that, as I had shared, the first of our 7 MTW activities that we implemented that first year were tied to the statutory objective of cost effectiveness. Next slide, please. And so you'll see here, you know, as we went through the years, then we tackled more that touched each of the 3 statutory objectives. One of the big ones for us to expand housing opportunities is number 12, local payment standards. Again, I mentioned that our geography is so large, you know, it takes us about 4 hours, 3 to 4 hours to drive from one side of our county to another. Not like Alaska where you have to take to fly, you know, from one part to the other. But so we have local payment standards. It's something that we created through our MTW flexibility before small area FMRs, in that we had an external third market study done to determine where are our markets, kind of how many submarkets do we have? We border LA County and also Riverside County, and we border the state of Nevada. So our rents are very different. They range between about 60% of FMR to almost 150% of FMR. So we have 9 different submarkets, and we have different payment standards for those submarkets. And that has helped our families expand their housing choice to move to areas of opportunity, as an example, which is typically the cities bordering LA County. Next slide, please. And then we are one of the, it was activity number 20, but we are one of the few housing authorities that also has term limits. One of the other things that we've done is activity number 27. We have a local project-based voucher subsidy for developments using tax credits, where our families pay the tax credit rent, and a subsidy is still provided to the development. This allows us to make these new construction, really the redevelopment of our old public housing, financially feasible. Next slide. So this is topic is on finance, right? So some financial lessons learned that we wanted to share. We created separate funds for MTW in our general ledger and our chart of accounts. We created one separate fund just for MTW activities. This is really important, and you'll understand why, especially when it comes time to submit your financial data submission, FDS. We also created a separate fund for MTW local non-traditional activities. Philip talked about that. I would say even if you're not looking at local non-traditional activities right now, I would urge you to still create that separate fund. If you use Yardi, they're called project codes, I think they're called. And then we also created separate accounts in our general ledger for transfers in and out of the MTW fund. There are very specific rules that you have to follow for those transfers within the financial data submission. And so it's really important to just create those separate accounts now. Here are some examples of how we use those accounts. And so as an example, transfer in from MTW to the Housing Choice Voucher Program, and then transfers out from HCV to MTW. Same thing with public housing and also with public housing capital funds. It's really important to continue to keep track of your expenses separately and by the original source of funds. You never know when you're going to need that information. And so for us, even 16 years later, we still keep that information separate. And every once in a while, it's really helpful that we have done that. Also, before we move on to the next slide, we do this for VASH as well, because when you receive your funding notices and your funding on a monthly basis, for us, our HCV HAP, HCV admin, and VASH funds come together. And so we keep those VASH funds separately and do the reconciliations of those reserves separately as well. And that's important to continue to do. Next slide. So we talked about the financial data schedule. Again, we'll need to report MTW expenses in the FDS separately and create new columns in FDS. So it's really important to right now create a mapping of your chart from your chart of accounts to the FDS line items, preferably in your software system, so that you're not having to do this manually when it comes to year end. Also looking at your software. Is your software going to accommodate the changes that are needed? And don't assume that fungibility will solve all of your financial problems. We hear that a lot. You still have the same amount of funds, right? As Philip stated, you're not going to get additional funds. You're still subject to proration. And you may have what we've experienced even now and at the very beginning is that we actually had additional costs. So for example, for implementation of certain activities, research, we partner with our local university to do research, analysis. We have an analyst that specifically works on our MTW initiatives. We have 30, so that also plays into that. And then technology. It seems like every single software modification costs $20,000 or more. And so that's something that we've had to take into account into our budgets as well. And to ensure that you're still meeting the program requirements, we've seen, as an example, an uptick in market rents across the country, specifically in our county. And so we've gotten to a point to where our per unit funding is lower than our per unit costs, but we still have to work on serving our MTW HCV baseline number of families. And so, you know, looking at our activities, looking at rent reform to see how we can continue to make that happen. And then continuing to keep track of your reserves separately. So keep track of all of those different buckets of reserves, including VASH, very important, separately. Your CFDA numbers, research FDS changes early on, and then look at any changes in your CFED groupings. You may now be required a single audit to do a single audit since MTW funds are combined. So something to take into account now, depending on where you are on that kind of audit procurement process, and you may have to do a modification to that auditing services contract as well if a single audit's required. And then you can create roll-ups too in your chart of accounts and to like a master MTW fund as well, if your software system will accommodate that. Next slide. These are more FYI and kind of an informational slide. I had, in the past when I presented, I shared that we always create an implementation plan when we are looking to do a new MTW activity. And so this is just a snapshot of the sections within our implementation plan. Of course, there should be a financial section, but these are the different, again, the different sections. So again, financially related, what are going to be any potential additional costs? Are there any anticipated cost savings? What's the financial impact? Of course, I talked about any software modifications may create a financial impact as well. And I'm happy to answer any questions about any of these sections as well. Next slide. In terms of lessons learned, one of the things that we weren't prepared for were the potential additional responsibilities for our financial and accounting team. So again, the changes in the chart of accounts, any additional reporting requirements or more reporting changes related to VMS, the financial data schedule or MTW plans. And it's also really important for your finance team to be at the table when even in discussions with operational changes and to understand the why behind program changes. If you're using fungibility and having to report those kind of non-traditional costs into VMS, then it's really important for your finance and accounting team to be able to flag those things and know how to properly report them into VMS. Again, communication is key between operations and finance. We actually have bi-weekly MTW strategy meetings where we include our financial staff and operations as well, or some of our management team members. We have 30 activities, so obviously we can't go through them all, but we highlight certain ones, look at, are they achieving the intended outcomes, but we always include finance. And we also have what we call once a month voucher leasing planning meetings. We look at our per unit costs, our per unit funding, can we exercise fungibility with those funds? If so, why or why not? What could we or would we exercise fungibility for? We project out our lease rate and our reserves as well. And we go out 2 years. We use the 2-year tool, but we've created our own internal tool with some additional detailed information. And again, we go through that at least once a month between operations and finance. Something really important, I'm sure it feels like you're drinking from a fire hose because there's so much new information coming at you, kind of lessons learned, and in hindsight, read the appendices, I like to print things out, highlight them, flag them, know what waivers you have, which ones you have to request, and also understand the timing of public notices, public hearings, and submission deadlines. So we create a calendar. We kind of work backwards from when things are due because it does take a while, especially with the public notice and public hearing requirements to have that kind of final annual plan amendment or annual plan addendum to be completed for submission. Next slide. For us, we actually brought on a consultant the first year of our MTW designation. We roped in our auditors, I think later than we should have. So that's something I would encourage for you to do early on. And now we include that in our request for proposals for auditing services is an auditing firm that has experience working with MTW agencies because they are very helpful in guiding you through that process. Also, we've had to expand our analytical and reporting responsibilities. We do a lot more tracking, of course, of our activities, the outcomes, reporting, analysis, evaluation of our metrics and expected outcomes. Also factoring in, if needed, maybe when it comes to budgeting, is overtime, depending on what you're going to implement, what activities you're going to implement. Are you going to do them at research? Are you going to do them all at once? And do you need some temp help or overtime help? Again, I talked about this cost of the software modifications. You may third-party research. I know that HUD's doing the research for the expansion agencies, but also if you need any specialized training, factoring that into your budget as well. Next slide. And then the approach for us in terms of communication is we know communication is the forefront of everything. And so we made sure that there was communication to our agency's team. We talked about focus group sessions. We had listening, educational, and input sessions with staff agency-wide through our example all-hands staff meetings, and also at different department levels. So we had our analysts go to different department meetings to share, be able to answer questions about what changes were coming and why. It's important to address any concerns. You know, it's unknown for some staff, or they may not really understand what moving to work is. The name is really misleading. Educate them about the benefits, you know, especially any changes that would lead to savings in staff time, and share ideas for solicit ideas for how MTW flexibilities can be used. Important communication to our residents and our program participants about what could be expected. We realized there was a lot of fear, again, because of the name, moving to work, that we were just going to roll out this, you know, work requirement. It's important to talk about and make space for their role in the decision making, or in the input process. And again, clarity on the name and the designation moving to work. Next slide. Of course, with your board, we do what we call board building sessions. So they're at the beginning, I do my ED report, and then there's 15 to 20 minute board building sessions. I would say at least 40% of them throughout the year, and they happen at every board meeting, have to do or touch moving to work, or some activity or some changes that we're doing. Before we submit our MTW annual plan to HUD, we brainstorm with HUD. I know this is what we're doing. You know, do you see any pitfalls or anything that we should be looking at that we're not, questions that need to be asked? But we do the same thing with our board. So we do, we call it a preview. You know, this is what we're working on to see, because you want to address that early on versus here board, here's for recommended approval. And, you know, because of politics or whatever reason, they may see an issue with what you're looking to implement. And they can become a champion for, you know, your MTW activities and your designation. It's really what's happened within our agency. Also communication with your community, elected officials, and any other interested parties. With your local field office, we do kind of those info sessions with them. This is what we're doing and why, this is how it's going to look. And because of portability, this was a big lesson learned for us, is with other public housing authorities, especially your big port agencies, what changes you're making and how it's going to impact them and your customers. And we also have created fact sheets, because it's really trying to identify how to make that communication as easy to understand, you know, that changes are coming and what they're going to look like and what this designation means, not just for your agency, but for the community. We also created talking points for staff and a Q&A documents, depending on the activity. Next slide. So here's an example of some fact sheets that we've created. These are available on our website for you to download as well. You're more than welcome to permanently borrow, is what we say. Any of these, we'll take it as a compliment. If you have any questions, you can also reach out to myself or our policy director, Nicole, and I'll share that contact information as well. Next slide. So last slide. I feel like I've just been rambling on. So some key takeaways that how we see our key takeaways related to moving to work. Again, communication is crucial to all stakeholders. Tackle your administrative operational efficiencies first is our recommendation. And to really be strategic, consider your staff, your software needs and potential barriers, your funding capacity. Start with changes that are low effort and high return, create implementation plans, and also the existing MTW agencies are here to help. There's, you know, not just the initial 39, but there are other expansion agencies that have started, you know, implementing activities and their work. And so I am actually on the board of the Moving to Work Collaborative. That's another great resource Hopefully you were able to attend the MTW conference as well. It's another great resource, one of my favorite to attend. And so there's a lot of resources out there for you, including, of course, the most important partner, HUD. And to have proactive conversations with HUD, right? Before you kind of button everything up, our advice is have a preview kind of brainstorming conversation with them. Hopefully they're okay with me saying that, but that's been really helpful for us. And the MTW is really not a program. It's really part of who we are as an agency now, and it's been embedded into our agency strategic plan. It's really, like I mentioned, shaped and changed our culture and who we are, how we think. So be ready and excited for that change that comes with the designation and everything after it. So next slide. Here is my contact information and also Nicole. She's our Director of Policy and Communications and actually started off with our agency as our Moving to Work coordinator and oversees the overall MTW initiatives that we have her at our agency. I'm happy to answer any questions if we still have time. Thank you.
Thank you so much, Maria. That was a lot of really great information. We don't have any questions in the chat right this moment, but if you guys have any questions, please feel free to input those into the chat or just type into the chat that you'd like to come off mute and you can verbally ask your question. Maria is going to hang around and we're going to have an opportunity for her to answer some questions at the end as well. So please put those questions into the chat if you have them, or let me know that you want to come off mute. While we're waiting, I'll just say I really appreciated the takeaways. You just had such great comments, especially about communicating and utilizing HUD as a resource there. I think that's something that sometimes folks don't want to do, but it's the best thing to do. So
Thank you. Hopefully there's no questions because I confused you all. But again, I'll stick around. So if anything pops up or you have to process something, please feel free to reach out. Thank you so much for having me.
thank you so much, Maria. All right. Well, I'm not seeing any questions coming in, so we're going to go ahead and move forward. If you do have any questions, again, Maria's going to hang around and we'll be here to answer any questions after as well. So now we're going to move forward. We're going to take a break. We'll have a 10-minute break. It is 2:58, so we'll meet back here at 3:08 and continue our session. We'll go straight into breakout sessions then. All right. Thank you, everybody. I'll see you back here at 3:08. All right. Welcome back, everybody. I hope you had a great break and had a chance to grab some water and just take a moment. So before the break, we reviewed sections 8 and 9 funding calculations. And we heard some great insights from Maria. So now we're going to break into smaller groups to have a group discussion. In a moment, you're going to receive a pop-up window asking you to click the join button. So don't do it yet, but when I tell you to, click that button to go ahead and enter your breakout room. So as I stated earlier, this is going to be your chance to meet some folks from other agencies in a smaller setting, kind of in your regions. And you're going to discuss long-term goals your agency hopes to achieve, steps you're going to take to prepare for your MTW status, and also funding-related topics that you'd like to hear more about. Each facilitator, each group is going to have a facilitator from the MTW office. We're going to be in these breakout groups for 10 minutes. At the 10-minute mark, you're going to automatically be moved back into the main room, and we're going to briefly report out on the discussion that took place in each group. Okay, so now it's time. If we can go ahead and move folks into their groups, you should see a join button pop up on your screen, and if you'll click that and go ahead into your breakout rooms. All right. All right, welcome back from the breakout session. Kind of giving just a moment to make sure that everybody is back in the room. All right. I hope you had a great conversation in the breakout session. Let's provide the facilitators a moment to choose one or two highlights from the conversation in their respective groups and kind of give us some information. So, Eva, can I begin with you? Would you share some of the conversation that happened in your group?
Sure, thanks, Andalyn. We had a great group and discussion. The biggest challenge really right now is just the overwhelmingness of it all. There's so much information. Not knowing where to begin. So one PHA mentioned that they put out a bid for a consultant to help them, at least in this first year, to get going. Somebody else mentioned that they need to get a better handle on things so that they can determine what the long-term goal is. And other steps, what steps did agencies take? Some have reached out to their local MTW agencies to have discussions, and making sure they communicate with their partners in their office, the financial people, to make sure they're on the same page.
Very interesting. That's really great that folks have been able to reach out to other MTW agencies and get information. That's what we all want, right? Helping and using
Yeah.
each other's resources. Yeah, I know that it is could be overwhelming. Like Maria said, drinking from a fire hose. There's a lot going on.
Yes.
In the webinar slide decks that we send you, there are a lot of helpful resources. But I just want to reiterate also that the MTW office is there for you, right? So the MTW email address, MTWflexibility2, and that's the Roman numeral 2 at HUD.gov. Always there as a resource as well, right?
Yes, of course.
Perfect. Okay. Thank you so much, Eva.
You're welcome.
Now I'm going to move on to Tanisha's group. Tanisha, can you give us a little insight into the conversation from your room?
So, hey everybody. The PHAs in my group were focused on operating efficiencies like biannual inspections and things like that. And there was a lot of discussion about developing more affordable units with their MTW flexibilities, and some of the things that the PHAs are doing to prepare are having a lot of meetings because the public process is very important, and it's helping inform them of what activities they want to implement. So I thought that was great. Yeah.
Yeah, I agree that public process is invaluable, and it's something that HUD wants to see happen, but also it gives you just a lot of insight into what you need to do in your community and the public's needs. So.
Oh, one more. And folks thought that the information was helpful as well. Like they thought that this was helpful and it helps them plan and prep for the things that they have to do. So
Wonderful. All right. That's what we love to hear. So, all right. Thank you so much. Lastly, we'll move on to Autumn's group. Autumn, can you take a couple of minutes and give us some insight into what happened in your breakout room? Let's see here. Not sure if Autumn can hear us. Okay. Was there anyone that was?
Sorry.
Oh,
Can you
there
hear
you
me
go.
now? Yeah.
Yes, I can hear you.
So we had a housing authority from North Dakota that is in a rural area, and they are investigating and researching how to consolidate the 3 housing authorities into one, which is really exciting. And they are excited to implement the standard deductions and get rid of all of the, the administrative burden of that. And the housing authority in Illinois, they're interested in the administrative and operational efficiencies, and they would like to learn more things, all MTW things, specifically reporting and compliance. So.
Fabulous, fabulous. Well, I think we have those things lined up in the onboarding series. So hopefully we'll get to that and answer all of their questions. And yeah, combining three PHAs into one huge undertaking and sounds really, really cool. And like it might benefit a lot of people. So very cool. Thank you all so much. I hope that breakout session was helpful in, you getting to learn your fellow MTW PHA members, and also in getting some questions answered. So, okay, at this point, we are going to um, transition to a video of Jody Bogan. Jody is the former Chief Financial Officer with Boulder Housing Partners. So in this video, we're going to ask Jody some questions about her experience navigating MTW finances. We thought her answers were really, really insightful and would be helpful for you all to hear. So we'll transition over to that video now.
At this point, we're ready for a foray into hearing from another experienced housing authority. You actually heard Praveen refer to the value that Jody Bergen brought to the conversation in one of the breakout rooms, and we're going to give you all a chance to hear from her. I'm going to begin by asking Jody a few questions and letting her share some general thoughts with you. If you have additional questions for Jody, you can pop them in the chat. And if we have a few minutes at the end, we will go ahead and come to you and let you come off mute and or answer your questions in the chat. So Jody, welcome.
Glad to be here.
Wonderful. Why don't you take just a second to give people a sense of your background, how long you've been at Boulder, your role, that kind of thing.
Sure. I've been CFO for the past 4 years at Boulder Housing Partners. I've been with the agency for about 11 and a half years in various roles. We became an MTW agency in 2012 as part of the 39 agencies. To give you a scope of our size, we have 937 vouchers that are in the MTW umbrella. We have about 1,400 vouchers overall. So we have some like mainstream and NED vouchers and emergency housing vouchers. We don't have any VASH. We have about 1,600 units of rental housing between our LIHTC owned properties and our owned properties. Yeah, that's pretty much it.
Great. Good to give people a sense of where you're coming from and what the similarities and differences are going to be to their space. So let me just start with a really broad one for you. Your best advice that you might give to one of these expansion agencies as it pertains to their financial operations. What are your nugget or nuggets on that?
Yeah, I think Maria actually touched on this as well. And this is really has to do with setting up your property codes. We call them property codes, or your cost centers, such as your different voucher programs or your public housing. But now you're going to have to add additional ones so that, for instance, because of the fungibility, when you receive operating funds, I'm not sure, this is probably not a change, but the CFDA number that you report that to HUD under, I'm not sure, I don't know pre-MTW actually, so I'm not sure if everybody has a 14.OPS CFDA number, but for instance, you'll need certain cost centers that just receive the money and then you just transfer it out in that same cost center to the cost centers or the programs that are going to need those funds. And so what Maria was talking about setting up the operating transfers between the MTW agencies is a really good advice, because you want to make sure that those net out to zero and that they stay within the MTW programs. So that's one. The other is that, and to create a crosswalk. I don't know, just, we have different GL account numbers and HUD uses. So between if you add new GL accounts and you haven't mapped them to the FDS lines or to CFDA numbers, if you have new properties, the properties are CFD numbers, whereas the GL accounts are to FDS line numbers. If you don't have those mapped, you want to make sure that at least once or twice a year, definitely before you close out your year, that you have everything mapped and it ties out to your trial balance and that you're not missing accounts or dollars. So definitely want to prove that out before year end. Let's see. You want to make sure that you get the board resolutions that you need. That's an easy thing to forget, but you know, if you don't have a board meeting, we have a couple of months where we don't have board meetings, like in the summer and in January after our year end, and so you just want to make sure that you stack those things and you get resolutions because you're going to need them for any activities, or if you want to use MTW funds a certain way. You have to get them to approve it. For instance, we just increased our payment standards to use voucher funds and use our voucher, not saying that correctly. We increased payment standards on our project-based vouchers that we hold. And we had to get a board resolution for that before we changed those contracts. Another item is change in CFA groupings. So the CFA is the Schedule of Expenditures Federal Awards, and your auditors are going to want to know what programs to audit. And under MTW, since these are now grouped together, you may have an audit compliance or a single audit on those programs, whereas you didn't before. For instance, like when you combine your public housing and your CFP money and your voucher programs, they're all one number combined. And that might exceed the $750,000 limit to require a compliance audit, financial compliance audit. Another suggestion would be to create roll-ups. So for instance, we have multiple cost centers under MTW, and in order to report on it for not just our budgeting and our financial reporting and our FDS reporting, we create a roll-up called .mtw, and it just brings a financial report of all the properties together. And we have an ability through Yardi Voyager, which is what we use for our financial reporting, to be able to see them individually or grouped together, but definitely having a roll-up under the MTW. And then we have another one that's called no MTW. So all of our other programs, such as the NED and the Mainstream and the emergency housing voucher programs and anything else that we have, we can report on them separately. And if we want to combine them all together, we do. Let's see. Project-based vouchers. Being able to increase the number of project-based vouchers at our own units, for instance, has really been helpful. It provides financial stability to those properties, and we can increase the number of project-based vouchers compared to non-MTW agencies. I don't know exactly what the new cohort's limitations are, so I don't know what to speak. I don't have that as a comparison. And most importantly, talk to other PHAs. Everybody's pretty friendly and is willing to help out others. So I would definitely lean on other people. You don't want to be recreating the wheel.
That's great, Jody. I think those kinds of specifics you just gave people, folks are really hungry for those kinds of bits of advice. So that's terrific. Think for a minute, in all of those things, some of it learned, I'm sure, from missteps along the way that you've had to go back and figure out. What are some of the most difficult changes that you've had to make in financial operations as you've gone along, and how'd you overcome it?
Okay, well, the biggest one that we had was tracking our reserves pre-MTW and post-MTW. And depending upon what the rules are for your MTW contracts, I don't know what those are, but in our case, our reserves didn't carry over. And so trying to track that, we had a HUD audit several years in, and we had to backtrack and really figure out what those dollars were. So it's really important to know those. And it's also important to track your PHA held reserves versus the HUD held reserves a couple of times during the year, particularly before you plan your budgets for the next year, so that you kind of know, what funds do you have available for maybe some other activities that you might be approving that you might want to spend those monies. And you want to work with your MTW regional coordinators and make sure that they agree.
Yeah. Jody is being appropriately really careful to point out that the rules under which her PHA operates may not be the same as yours. So you are not responsible for knowing the new rules, Jody. It's fine. Just sharing what you did, and folks need to make sure that it is or is not relevant for them. And thinking about those reserves is going to be important for people. So it's a great point.
Yeah. A couple other things. Auditors, your external auditors, if they don't have any background in MTW, it could create some difficulties and have you chasing your tail. So it might cost you more to have an auditor that's familiar with MTW activities. We just did an RFP for auditors, and we kept with the audit firm that knew MTW very well, whereas the one that pitched us and is doing our LIHTC entity audits really wanted our business to do the MTW, but they didn't have the experience. And, we just didn't want to be their guinea pig. So, and then the last item is on the public housing dispositions. That can be really difficult, and the time that takes is longer than you might think. So beware of that. So if you're planning to, let's say, sell some public housing into a LIHTC entity and you're doing your due diligence and you have your timeframes, if you have to get your disposition paperwork in, it could take longer. So beware of that. I know the RAD PBVs, you mentioned RAD PBVs. We converted 6 of our 8 public housing properties in 2017 to 4 of them were RAD and 2 were Section 8. And the RAD properties that we did have limited voucher increase potential due to OCAF limits. And I'm not sure if under the new RAD disposition rules, if that still applies, but it does leave you on an ongoing basis in the future with limited upside on those voucher payments.
Great. I think when giving some of your best advice, you talked about a couple things about making changes to your financial system. So thinking about the additional codes needed, the crosswalking, the mapping, all that kind of thing. Any other pitfalls that you want to just flag for people? Make sure when you're making changes to your financial systems, you think about these kinds of things. Anything else you'd want to add in there?
I think I just covered a couple of them already, but one of the items is we've used our excess HAP funding, or I should say unspent HAP funding, and we've earmarked those for development equity contributions. So any new LIHTCs that we're building out some new housing, we've earmarked HAP funds that we haven't spent, accumulated maybe over 2 to 3 years, and put them, committed those towards those equity contributions to those projects. And so when you report on that on VMS, that is reported, those HAP dollars are considered HAP expenditures. However, when you report them as a revenue side, it's a capital grant. which is very different because normally those funds would match. On the VMS, the funds are, well, VMS, it's expenditures, but when HUD gives you those voucher funds, you record those as operating funds. But if you use them for an equity contribution to a new housing, it's a capital grant. And so there's a differential between VMS and the FDS, and it's always going to come up. And when you submit your REACT, you're always going to have to explain it. So we just have a planned schedule that shows those funds and why they're show differently.
Great. You're mentioning FDS and VMS, and we know that, you know, lots of PHAs have had detailed questions about both of those. So let's take FDS first, maybe. I want to talk for a minute about making the transition from non-MTW FDS reporting to MTW FDS reporting. Any advice about that beyond the couple of things you've flagged so far?
You know, I've pretty much always been doing the MTW, so it's kind of hard for me to say, but I think setting up, you know, the separate cost centers, like we will set up many cost centers under MTW so that if we have project-based vouchers at a particular property, we have a whole cost center just to show those to track those expenditures. If there are tenant protection vouchers, we have a cost center to track those tenant protection vouchers. So we might go overboard on tracking different cost centers, but we roll them up into one. And so you can't go wrong having additional lines, GL account numbers to track all the different numbers, because it's harder to split it out later than it is to combine them.
I think that theme about tracking and making sure you've got everything identified and being able to aggregate is one that we've been hearing here. So
an example would be we recently implemented vacancy payments. So we are we have a program policy where if a voucher holder vacates a unit and that unit isn't rented within 2 months, then we will pay a vacancy payment to that property for the 2 full vacancy months. And so we keep that, we just created a new GL account number to track just vacancy payments as a separate line item.
Great example. Yeah, thank you. You may or may not be able to speak to this, the transition, since you've been mostly MTW, but what about VMS? Any advice as people are transitioning to VMS reporting for expansion PHAs? Anything that they should be thinking of in terms of the changes that might help simplify VMS reporting?
Well, VMS has separate lines for MTW, so as long as you have all those details, supporting details, I think you should be able to understand where they belong. Yeah. I do want to point out one thing, and this is on the, it actually comes to the next one. Next question, go ahead, I'll wait.
Well, I've jumped around a little bit just to kind of follow you. So my last question really is, any other financial lessons learned from your time in the MTW demonstration? So go wherever you want to go and then share any other lessons you've got.
Okay, so just verify which programs belong in which CFDA. As an example, our RAD program, we initially included with MTW under the MTW group. And then later we're told, about a year into it, we're told that it should be a non-MTW activity. And then 5 years later, we found out, we were told that it should be a MTW activity. And so that is super important to have verification. It helps to check with other agencies on those sort of things if you're not sure too, just to confirm, because there shouldn't be inconsistencies that way. And as much as people try to give you the best advice, sometimes not everybody is knowledgeable in all details. So it just helps to check around. And if you have something that should be an MTW that wasn't, you're losing out on your fungibility of those unspent funds. So it's really important. And then the only thing, financial lessons learned is on our project-based vouchers, increasing to payment standards. We kind of left a lot of money on the table for a while as far as not increasing our payment standards as high as we could. And we checked around with other agencies, and most agencies are doing that. So it helps support the financial stability of those properties. So if you have HUD cap, it's a good, and you have that bandwidth, you have to certainly budget for it and make sure that you can sustain it going forward. But it's certainly worth looking at.
Great. So that gives you all an earful about some of the things that they've been thinking about in Boulder. I do want to give some minutes here for people to ask Jody questions directly, the kinds of things that you've been struggling that she might be able to put some insight on. So if you want to just take yourself off mute and ask a question, that's great. If you want to put a question in the chat, just make sure that you address it to everyone, and I can feed that over to Jody to give us some thoughts or responses. If anybody has anything you'd like to ask, please do.
Since nobody's bringing a question up right now, I did want to bring up one last thing, and that is any HAP that's used for development activities has federal compliance requirements that layer. So it's really beneficial to add those dollars onto a project that already has federal vouchers, because they have the same compliance requirements instead of layering on a whole nother set of compliance.
All right, so there we heard from Jody Bogan. Again, lots of really great information, another expert insight. And so now let's go to back to the chat, the questions. We have a couple of questions in there, and thank you guys so much. Feel free to, input any other questions in there, or let me know that you want to come off mute and ask your questions verbally. And this is the time that we talked about. We have time for questions for Philip and Maria. And so our first question, would love to learn more about local project-based voucher subsidy for developments using tax credit rents. If Maria may be willing to share more, or maybe this person could connect with you offline. But if you're willing to share more information about local project-based voucher subsidies for developments using tax credits.
Hi, yes.
There you go.
So what we did was we provide the same subsidy to the development, but the families pay the tax credit rent. So that's how we were able to make the project cash flow. In terms of, we were able to add additional affordable housing units to that development. So the one-for-one replacement, let's say, would have been 50, but we came back with almost 100 units because we were able to leverage that subsidy and add additional tax credit units. So we increased the number of affordable housing units in that community.
Great. Yeah, tax credits can be a really good, useful funding source. All right. This one, I'll toss to either Philip or Maria, whoever wants to jump in here. So what is the best advice you can give an expansion PHA as it pertains to financial operations?
I mean, I can just give a general response, and then Maria, if there's anything else you want to toss in that you think is relevant, that would be great, like a specific from your PHA perspective. I would just say, really, just to start off, is to be extremely familiar with the contents of the MTW operations notice. I think that's a great first step in terms of getting yourself ready. In terms of, another thing I would also just tell you to think about is what are the is to go back to that question that we asked during the um, breakout session from the first webinar, the welcome webinar, and also this one regarding what is it that you are trying to achieve with your MTW status and funding flexibility. I think your answer to that will help guide you along the way because each of you guys have different agencies with different market conditions. And so I think that is a really critical, important part of this whole process in terms of with like funding flexibility is going back to thinking about your local community and what your needs are and using that information to guide you along the way. So that's what I would sort of just say as a first step. And then Maria, if there's anything else you want to add.
Sure. I just want to add, so Jody provided some great recommendations as well. So, and to add to Philip's reviewing the operations notice, um, I'm a visual person, so you may be as well. And my background is in finance and accounting as well. I actually started off as a finance director, but I think what helped me at the beginning, and I wish I would have done it better, is to list, organize, and prioritize your to-dos. Because right now it probably seems overwhelming, all of the things that you have to know and do. And so if you could start to at least list those out, organize them, and then prioritize, right? Kind of take things in chunks as to what you need to do based on when those things are due or need to be accomplished.
That's really good advice. All right, thank you both. So when it comes to FDS reporting and how to make the transition from non-MTW FDS reporting to MTW FDS reporting, um, Philip, do you have any advice that you give the agencies around that?
I'm going to pitch this one to Maria because I think hearing from the agency perspective would be probably the most beneficial this time. And I will just say, per my, kind of comments from the prior webinar, we know that this is an area of concern in terms of like the current guidance and things like that. So that's something we're taking a look at. But Maria, do you have sort of any tips from when you guys, or just from your perspective on that would help them with the transition?
I think the suggestion I shared, and also understanding what your agency wants to accomplish and brainstorming with your HUD rep, and also breaking those out, the things that you want to accomplish or get done, like your wish list that you had, into what things really need MTW flexibility. And how can you prioritize them, right? Don't tackle 10 activities in 1 year. Which ones do you want to tackle first and why?
Great. And I have one more question here, and I'm going to pitch this one to you, Maria. What's the most difficult change that you had to make to your financial operations, and how did you overcome that?
I think that operational knowledge, so having the background as to why, operations, so kind of building that bridge, because like I mentioned, I started off as a finance director. So, so again, going back to my original suggestion of being able to identify all of the changes that you need to make and all of the knowledge that you need to learn, the things that you need to learn, but also understanding, the direction that the agency wants to move towards, with your executive director and your operations team, and how that's going to possibly change how you report. There may be some additional financial statements that you may need to create, or additional reports, um, um, so that there's cohesiveness between operations and finance.
Very good. I want to, reiterate one more time. We want to hear from you. If you have any questions, then feel free to put them in the chat or just come off mute and ask. I'm going to ask Maria again. Sorry for picking on you, Maria. One more question I think is going to be really helpful for folks. If you recall, what kind of resources were most helpful for you in figuring all of this out?
Relying on others, relying on HUD, relying on and reaching out. I loved the advice or the suggestion. You know, someone already reached out to their neighboring MTW agencies and brainstorming with them. And I think that's it. I had
Awesome.
another thing, but I forgot. Sorry.
Yeah, definitely reaching out to your neighbors, other MTW agencies. I thought that was really great too. And then HUD. And again, that's MTW Flexibility 2, Roman numeral 2, at HUD.gov if you want to reach out directly. I don't see any other questions right now. So do put them in the chat or come off mute if you want to. I'm going to move forward really quickly and just go through some of.
And Andolyn,
Yeah.
I received a question from
Oh,
a
great.
PHA.
Sure.
So let me read the question and then I will answer it. So the question is, when you talk about the pre-MTW per unit cost baseline, is that going to be the FY 2023 per unit cost or pre-ACC amendment per unit cost? And so the answer to this question is kind of going to depend on when you execute your ACC amendment. So we're going to make some clarifications on the example we provided in the slide and repost those. But let's just say for the purposes of the example from today that we were talking about your HAP renewal calculation for 2024. Let's assume that the MTW agency, the Anytown Housing Authority, executed their ACC in September of 2023. Okay, so what we're talking about with the per unit cost there would be their calendar year 2022, and then we would use the 2023 inflation rate to be able to derive that MTW renewal eligibility cap. So what we'll do for the purposes of this slide is we're going to make sure this is super clear, all of these steps here, you know, and to annotate things as we need to, and we'll make sure we get that posted on the HUD Exchange to ensure that that's really clear. Okay, hopefully that answered that question.
Thank you. Yeah, we'll get that updated to the HUD Exchange and we'll send it back out to all of the participants as well. All right, I'm going to go through some resources now. All right, so the MTW ACC amendment available from the MTW expansion page on HUD.gov. It's always there for you. And there's a FAQ around that that's really useful. I've gone through these a few times in the past, so I'm not going to pull them up this time. But the MTW selection notice, as always, your MTW operations notice is something you should have pinned and refer back to often. There's a whole moving to work page on HUD.gov that gives a lot of great information, including information about other cohorts as well, but really great information so that you can dig in there. There's the moving to work expansion page, and there's an online manual as well as trainings. There's the MTW expansion webinars page, and so that shows all of the onboarding webinars that we've done to date, including the ones for this cohort. So the last 2 webinars are already posted there, and this webinar will be posted shortly. There's a MTW SPV FAQ, and of course, always refer to your welcome letter timeline and the resources that you received via email when you were brought onto the cohort. We hope that you'll join us for upcoming onboarding webinars. We try to really give you all the information that you need to be successful as an MTW agency in these onboarding webinars, so it is really important that you join us. Our next one is June 27th, and we're going to be talking about the MTW supplement to the PHA plan, MTW waivers, and the public process. After that, July 25th, we're going to go through MTW supplement and how to submit your first MTW supplements. We'll give some really good tips and tricks there that hopefully will be helpful to you. We'll have office hours on August 22nd, so you can ask lots of questions. And then going through that MTW, the HUD 50058 MTW expansion form changes, that's one that will be needed and will hopefully be very helpful to you. That's going to be in September. So we have the office hours on August 22nd, but don't wait until then to ask your questions. Again, email MTW Flexibility 2, Roman numeral 2 at HUD.gov. In the meantime, with any of your questions, and know that the MTW office is definitely there for you as well. I want to thank everybody for coming today. Thank you so much, Maria. You gave excellent insight, and having you here today was a real great thing. You were invaluable. And I hope that everybody has a wonderful rest of your day. Thank you, guys.